The Fed tries to control the economy by shifting around interest rates. But for the last few years, it hasn't been able to. It pushed interest rates all the way down to zero, and you can't push them down any further. Well, right now, the economy is starting to get back to normal, and so we're facing a question, when or how should the Fed lift off? That is, start to raise rates. Charlie Evans, who's president of the Chicago Fed and gets to vote on these decisions, reckons the Fed should wait a while. Here's his argument. You want to think not just about your central forecast for the economy. Most of us expect that the economy is going to get better. You want to think about the risks as well. And when you think about those risks, it turns out you should worry more about the risks that things turn out to be worse than the risk that things will turn out to be better. He has two arguments. Imagine that things do get worse in the future. There's an expectations channel. If things do get worse in the future and the zero lower bound is still binding, then that's going to actually have an effect on the economy today. And that's actually one of the reasons why we should keep interest rates lower for longer. The second argument that he makes is perhaps more intuitive, which is if we want the recovery to take hold, we've got to let things get some real momentum behind them. We need the recovery to really be moving before we can be confident that we're out of this zero lower bound situation. And that's the argument for keeping rates lower for longer. And that's why I think Evans is trying to persuade his colleagues not to raise rates in the next few months.